I'm Bryce Butler from Access Ventures, and this is More Than Profit, a show where I talk with founders, investors, entrepreneurs, and leaders of all kinds about living and working with purpose, how they do it, and why. Welcome back to More Than Profit, and this is episode 39. We are changing up the format, like I mentioned last episode, where we are releasing one a month. Last month, we talked to Marcus Stubbs about the No Homelessness campaign, and this month, I'm talking to someone I've worked with for a long time. In fact, he and I were just joking, it's going to be very difficult to get this into a tight time frame because we get together for a beer and it probably lasts 3 to 4 hours. So without further ado, David Taliaferro is the founder and CEO of Lenderfit, one of the portfolio companies of Access Ventures. And before that, he worked at Access Ventures, overseeing our micro-lending strategies, created a couple different tools, and has done some really cool things. But I'm going to let him talk about all that. First off, David, thanks for being here. I want to kind of talk a little bit about what predated Access Ventures. So where are you from? What did you do before Access Ventures? How did you ever get to Access Ventures? I think that's an interesting story in and of itself.
Yeah. Well, thanks. Yeah, thanks for the intro. Sure. Well, let's just dive right in. So I think, when we're talking about Access Ventures, we'll just put a spot in the timeline. So came on board with AV, really late 2013. So obviously some time out in the workforce prior to that. And so I had, straight out of college, I had actually joined a mortgage broker office, getting leads from an online marketplace back in the day. Started in 2006. Just before the crisis hit, got a chance to peek behind the curtain and see all of the craziness that was going on in mortgage land in 06 and 07. And so, spent about a year there and then moved over to an energy consulting company, had a role as an analyst, and I was really behind a computer a lot. I kept asking to talk to customers and no one would let me. And so then the other thing that I realized was I kept trying to change the processes. We had a set, I had to run like 400 RFPs a year. Sounds so exciting.
Yeah.
And there was a set format for presenting the information, but when you do 300 or 400, you get ideas on how to improve that. But if you're not if you're not an entrepreneur, if you have a larger company, they really want someone to just do the same thing over and over again. So, some of the inklings and some stirrings inside around, just wanting to be able to express, be more creative, apply some of the ideas that I had to improve things. Started to get restless. Even before that, even growing up, really just kind of trended towards entrepreneurship. So, classic, cut grass. Would hop on my bike and put flyers around the neighborhood. You weren't allowed to put them in the mailbox. That's illegal. So I would rubber band them to the flags outside of the mailbox and just disappear on a Saturday and get the flyers out. I had a garden at one point that my mom convinced me she was perceptive enough to know that she would end up taking care of the garden, but I was going to sell vegetables door to door, sold little keychains and cards and things in school. So I think most entrepreneurs have those stories when they were kids, and really went through a season in life where just thinking that maybe somehow business or business was not the greatest thing, was somehow maybe evil or people were just chasing profit or whatnot. Yeah. And went through a big season of my life just trying to kind of dial all those urges and desires back. And, really leading into AV, realized that I couldn't really not be that way. Yeah. And so the chance to work with AV, and I knew AV was interested in access to capital, micro-lending, microloans.
Yeah, but let's stop there real quick because I think some of the things you're hitting on, I do think it's helpful because you and I met before Access Ventures. In fact, it's kind of crazy. Looking back, I think sometimes it's like you and I have chatted about this, but the people that take those early risks, like obviously you were newly married, working at an energy consulting company, and you kept in contact with me as I was working at Blue Sky, a family office in the area. And always kind of like, hey, is there something I can get involved in? If we're hiring, And then when I started Access Ventures, roughly 2013, like you said, established formally in 2014. I think some people forget we're new in the ecosystem. You literally just got married, and you're going to your father-in-law and say, "Hey, I'm going to quit this like cush job at an energy consulting company and go work with this startup. In fact, I'm the first employee or one of the first employees, and yeah." At least I've got health benefits.
Yeah. A startup nonprofit for
Exactly.
that matter.
Exactly. I was like, I can't imagine that conversation in his now me, the father of 4 girls, and my future son-in-law potentially coming and saying the same thing, like, interesting. Let's talk about that.
Yeah. Our first child was 6 weeks old.
Yeah, that's right.
And, and so, yeah, there's definitely that conversation. And it was one of those, this doesn't seem like a good decision. Not that it, and my father-in-law's great. It's just one of those moments where it's like, wait a second.
Yeah.
and wisdom there too of just like, hey, you're about to have kids and they're going to be expensive.
Yeah.
But
I remember like when I started Access, really was the wild, wild west insofar as like we had a general thesis, but we didn't know exactly what we were going to do. In fact, I hired you mostly because of your drive and your passion to do something different, with really nothing shaped. I mean, you came in to shape it, which is kind of what we're leading towards, like with Lenderfit. Like, I don't remember giving you like, hey, go do these things. It was more go figure this out. And the challenge was like, hey, you're now running microfinance. We care about access to capital. We're working in communities that are underinvested. Help us figure this out.
Yeah, definitely. It's funny. It's better. It's so neat because when you go into a new role, and so many people struggle with, imposter syndrome. And I had never, while I'd been a mortgage officer in the past, and I had studied finance, I'd never run a loan program. And one of the first tasks was how can we create not just a loan program, but an innovative loan program, that factors in some of the traditional review metrics, but thinks about them in a new way that, again, increases the ability to access capital for underserved markets. And so I remember the first year or two just thinking, gosh, wow, am I like, I've never run a loan program before.
Yeah.
And, something sunk in, 2-3 years in, and I share this with, every intern I work with, and it's just saying like, hey, like, the imposter syndrome feels really natural, and you're going to feel that, as you go into new things, but it's also an advantage. And so, if I had come into AV with a deeper history in lending, and particularly commercial lending, there's no way that we would have had the creative outcome of kind of what the growth loan is today, even leading to Lenderfit. Truth be told, this is a funny story. In our first committee meeting to review a growth loan borrower, before the committee started, we had a committee member quit because they didn't feel like they could, in good conscience, review and make a decision based on, the information that we'd put together and provided. It was really that MVP. It's like, hey, what's the first committee meeting?
Yeah.
And kind of the MVP of the loan package and whatnot. So it was so kind of different and out there that we even lost a committee member over it.
Well, and I think what I've always appreciated about, the work that you've done with Access Ventures and now Lenderfit is you are like deeply rooted in the problem. And so I think that's oftentimes the starting point of a good entrepreneur is they're rooted in that problem, the experience of their potential customer. And so in that case, it was a borrower in a local community. And trying to understand from their perspective, what are all of the pain points they're experiencing, and how do we strip those away and make it more seamless for them? And so, that's ultimately how you built the growth loan. It was an MVP, and I think we were able to convince some folks to join us as committee members, volunteers, to kind of help us in the decision-making process. So I want to get into the nitty-gritty of the growth loan, but it's funny because I want to start a little bit on a tangent. You built the growth loan, but then we actually benched it for a season. And I think it was intentional because, again, back to being rooted in the problem of entrepreneurs that you had identified was this gap of capital that traditional banks weren't lending. And many entrepreneurs couldn't access because of nascent or non-existent family and friend network. And while you were building the growth loan and actually getting it ready to launch, along came Kiva Zip. And so we kind of, in a sense, we still had the growth loan out there, but we really kind of shifted focus and said, this is the first rung of the capital stack, the capital ladder. So let's work to do that. So explain kind of Kiva Zip, which now is Kiva US, and kind of your relationship there and how that's also shaped even some of your thinking on the growth loan itself.
Oh yeah, definitely. Yeah, I think I definitely approached early days in the growth loan with a social entrepreneurship hat. And I think one of the marks of a social entrepreneur that's a little bit different than I guess what people would think is a traditional entrepreneur is they're really looking for solutions that already exist to incorporate into a solution. What's the least amount of friction? What's already there? Without reinventing the wheel. And I think that's an interesting approach and just makes logical sense. And so here was Kiva Zip, an already ready-made platform out there. And it was available for small businesses to use, but then we identified, or they had started to work with some communities to create some kind of hubs of activity. And we saw that and we just thought, wow, if someone went and, trained with Kiva and came back to their home community rather than kind of going out to a different community for a few months and then leaving and returning home, but really took it back home with them, implanted it into an existing kind of trust network and system, then maybe a community could get even more results out of that platform. And so, which
I think is worth kind of, pinpointing, putting a little pin in, so to speak, is Kiva launched Kiva Zip as its own beta. In fact, they called it the Kiva Zip beta. It was an internal kind of project of Johnny Price, good friend of ours now at WeFunder. But they basically they took a lot of their international standard operating procedures, i.e. fellows, which the fellows internationally, they would parachute someone in for a period of 4 to 6 months to help work with the MFIs and get the presence established in an emerging market. And they kind of, when you mentioned that, the communities around Kiva Zip in the early days, that's kind of how they did it, where they attracted fellows and then would kind of drop them into a community. But given kind of the work that you were doing, you went to him and said, well, what happens after that 4 to 6 months? And it takes a while in some of these markets to build trust, like you said, trust networks. So talk to me about the initial reception of that kind of idea, and then how that really supported the work you were doing in Louisville and then later in other communities.
Yeah, definitely. Yeah, and too, I'll throw this out there just as we're talking about history. Somehow I got clued in. I was in a coffee shop one day right after I moved to Louisville, and there was an older gentleman sitting next to me, and he had a newspaper, a physical newspaper, and said, "You heard about this thing called Kiva out in California? They're doing these microloans to entrepreneurs." Wow. And so I just as part of my journey, how excited I was to have that kind of come full circle and to look at Kiva and to realize that they had a U.S. program that we could maybe work into this years later, and so. It was interesting because the max loan amount on Kiva at the time I think was just $5,000, and if you came back for a second loan, you could do $10,000. Well, in our particular part of the world, we had identified a really meaningful kind of ambitious loan amount for a non-collateral, non-credit based loan that we wanted to execute on in the growth loan was really like $35,000. And so that had us thinking, then how do we layer these? If they're lacking some of the friends and family money, have they at least been around long enough to get $3,000 on Kiva? If they come to us first, are there aspects of their loan use and what they're trying to get capital for that we can just direct them to Kiva and they can do it simultaneously, like start their Kiva process while working, within the growth loan? And so a lot of that just started to take place. And again, with this mindset of, hey, the growth loan doesn't have to be the end-all be-all solution. If anything, we really strategically need to make sure that it's part of a stack. And so, really just, taking what we learned from Kiva and implementing that and making sure that the growth loan wasn't a competitor, but was really complementary with that Kiva process. And so, that seemed to work really well. I think it still works well today. And then as we talked about Kiva amongst the community, and then even in future communities, as we went and talked around the country, I think what we found was there was a real appetite where either the city or a corporation or maybe a high net worth individual or a family had a significant amount of money set aside because they wanted to increase access to capital, particularly for smaller businesses, women and minority-owned businesses, et cetera, of which, Kiva is amazing for doing that, and so is the growth loan. And what we would go into these communities and realize that there were these little pots of money, and they were just sitting there, and the ideas had been sitting there for years because there wasn't a mechanism to actually get that money out into the community. Let alone revolve it in the community and recycle those funds through more loans. And so, I think that the reception was pretty great from that perspective. And then in a lot of ways, as we talked to other communities, they were excited for a fresh idea to come in. I think most cities and communities, they know each other pretty well already. They know each other's ideas. Yeah. And when a new idea comes in and it's been proven elsewhere, and there's already an existing kind of network of lenders or TA providers or you name it, it fits in.
Yeah, and I think, we could talk just an hour on the work with Kiva and the lessons learned. I think to kind of highlight a couple of aspects of that I think are helpful. One, as a true entrepreneur, you were constantly innovating and adapting the deployment strategy. First and foremost, suggesting like, hey, let's have the fellow from the local market, so they're not like being parachuted in, so they can actually build a network of trust within a local context. So because like the goal over time is that we've actually normalized and made like this idea of Kiva as more normative. Like when you think about I need access to capital, that's your first step. It's like 0% up to $10,000. But in order to do that, we saw this massive awareness and education gap. And the only way to overcome that was through consistent and repeated attention drawn to this. And so you went from like, hey, let's just do a Kiva fellow for 12 months that's from the local context. And we were able to get Kiva to buy into that. But then also like, hey, wait a minute, we actually need a fellow for more than 1 year because this person needs to be sustained in that local market. And so you were adapting this community strategy as you went, so that ultimately the goal would be that someone within economic development whose job is to help small businesses access capital, they would see Kiva as a tool that they could use to support businesses in their local market. And that really all they have to do is be that advocate, that person that's helping connect them to this online resource that oftentimes lays there somewhat dormant because people don't know about it. And we've seen the same thing now with WeFunder as we're doing stuff with them. And so I think, one, you've adapted that strategy, and you actually helped launch not only Kiva in Louisville, but also in Tulsa, Oklahoma, and Columbus, Ohio. And then kind of in partnership with LISC, helped write a playbook. So if people are interested in learning more about that, there is a playbook out there to kind of help identify ways that your community can adopt and adapt Kiva as a tool for supporting small businesses. But then you took those lessons there, and we're constantly evolving the growth loan. So that we can get to Lenderfit, if you could, like, what is the growth loan, and what are some of the lessons that you've learned probably over the last 5 years of kind of initiating and now deploying the growth loan in a local market? What are some of those lessons?
Yeah, so the growth loan is a non-financial collateral, non-credit based loan program for businesses with at least a year of history. And so, there's so much that changes in the first year. It is just tricky to get much capital out to pure startups. I know there's other groups out there that have really focused on that and getting larger amounts out to pure startups. But we just decided, hey, 1 year is still pretty aggressive, and we want to be able to deploy $35K because that's a more meaningful amount than a credit card or whatever it's going, whatever substitute you want to put in there. And so, as we started down the path, one of the things that became obvious real quick was that the entrepreneurs that we spoke with, or that I was meeting with, they could describe their business quite easily. And I could ask them questions about their product and how much are they selling it for and why did they do that? And, are they concerned about the margins there between, the ingredients that are going into the food they're making or whatnot? And really have just a wonderful, vibrant conversation. But if I ask those same people to provide a balance sheet or a P&L or put some of that into more of like a business canvas format, it was a real struggle. Instantly, it was a speed bump. And it's not because it wasn't an intelligent factor. These people were plenty intelligent, but it was certainly a time factor. They're running a business, and every time they apply for capital and it doesn't work out, that's a lot of time lost, and a blow to the entrepreneur of just, maybe this isn't worth my time in the future.
Sure.
And so, how can we meet the entrepreneur where they're at? Like, we had this whole set of rules kind of forced down from, on high over the decades of what is necessary in a loan package. But what happens when you show that loan package to the committee is they ask questions. Great, well, we got the P&L. Okay, why did your revenue spike in Q2? Well, okay, there's some big conferences and events, and it always spikes in Q2. Okay, that's interesting. So what I realized was that the numbers, there was always questions afterwards, and it was really understanding the information that was more valuable than having it in a specific format. And so we started to pilot this more narrative approach to the process. How do we just ask the questions that the committee is going to ask anyways when they're looking at the numbers, and get those answers if that's the end goal of where we want to go. And so, that was a big lesson learned, and we spent several years, really fine-tuning and tweaking that idea of kind of a narrative approach. I also mentioned that it was a non-financial collateral-based loan. A lot of times if I talk to traditional lenders and I mention this program, they're like, oh, you probably only got half your money back, or isn't that a grant? And it was different because what we offered, the opportunity we were offering was, hey, at the end of this review process, you're actually going to pitch your loan to the loan committee in person. And so you're going to stand up in front of these folks that you could see at the grocery store or at the next small business meetup event or with the SBDC, and folks that are going to be around and know of you and be influential as you seek capital around town in the future. And so really it was substituting that idea of social collateral and social capital. And that's certainly a big thing that's on Kiva as well, this idea of social capital.
Yeah, and I think, I don't want to zoom past it, but I mean, the genius of the growth loan is like, again, being rooted in that problem, and the problem from the perspective of the business owner that's needing access to capital. Because I think, like you said, we've just assumed that the process of getting a loan has been this way for a very long time, but ultimately, like, what you're really saying is like, no, we're trying to go back to the old days of community banking, where you could actually walk in and you knew your banker, and there was more of a trust network related to kind of the capital. And yes, financials were considered, and we're looking at those things, but a person is able to nuance that in different ways. And so even the notion of your committee that's volunteers that have the ultimate decision power on the loan, they're able to interact with that borrower. Versus at a traditional lending institution where they send in a packet and they may or may not get a callback. And a lot of times it's made based off of just data inputs into a system. And so, really, I think the radical kind of genius, and I don't use that word lightly, but of the structure of it, and it's not easy. I'm not trying to say that like what you built is an easy thing to implement, because it's narrative, it's people-based. And I think that's the complexity of it, but it's the beauty of it as well, is that we need to radically question the origins of things like credit scores or how we got to these decisions. And oftentimes what we recognize in traditional finance is it takes the same amount of time for a person, a loan officer, to make a loan of $100,000 or more, same amount of time. So when they're a business as a bank, time is money. And so that's what happens oftentimes, is a lot of these lower dollar loans get squeezed out. And when you say $35,000, that number was not arrived at lightly. That was what the SBA and Kauffman Foundation and others have identified as an amount that small businesses need to get started. And oftentimes that's the most critical amount of money, and it's the most difficult for them to access. And so I think if I could, like, talk to us a little bit about just some of your lessons around like the exclusionary just structure of traditional finance that the growth loan and other strategies like Kiva, like we mentioned, are trying to radically just question.
Yeah, I think that, so let's talk about credit score. One of the brilliant things about our economy and the way that we've been able to move so quickly and grow as a country is this idea of a credit score, some sort of centralized scoring mechanism to where I don't need as much trust to do business with you. So if no one in Louisville was willing to give me a loan, or Southern Indiana or Virginia or whatever in this region, I could then contact someone in California, and maybe I fit their, credit profile. And we wouldn't need to have that long-term existing relationship because they're just trusting the credit score. And so I do love the fact that, the speed and the growth and the access to capital that the credit score created. But one of my concerns is that normally when people advance systems, financial systems, they get really complacent with thinking that the solution they've put in place is a long-term solution and not a kind of justice solution. And so, I think that the advent of a credit score and an honest credit score, not one that's kept by, the equivalent of bookies, that are writing, slurs and everything inside of it, which, the history of credit scores is really fascinating. But an honest credit score, it's great, but it's not enough because, it's a justice thing, right? It was, hey, this isn't fair. People are keeping inaccurate records of my history, or there's a reason I shouldn't get capital, and why can't I prove it to somebody? So there's a good reason to do the credit score. But as that got implemented, there were systemic issues that are actually keeping people out of building the credit score, building the credit history, and depending on the color of your skin or where you come from or the neighborhood you grew up in, you just may not have access to the tools and products that allow you to create a great credit score.
And it's interesting, what was intended to be potentially one data point, a way to kind of coalesce all of this financial data into a thing for consideration, became the consideration.
Yeah.
And has created almost like a wall that's or a moat, or whatever your analogy you want to use, between the borrower and the capital they need.
Yeah. And I find that people are so comfortable. It's convenient to say, the past doesn't necessarily predict the future. But when it comes to applying for capital, that's exactly what people are saying.
Yeah.
Your past is absolutely what's going to occur in the future. And so I'm not going to make a loan to you. And one of the neat things about the growth loan was, we tasked the committee to be forward thinking. Hey, number one, credit score is another shortcoming of a credit score is it may not be accurate for the last 6-12 months.
Yeah.
What are the histories and the patterns, and what are the things that have changed in this person's life? And that affects speed. I'm not saying with the growth loan that you can review 1,000 loans a month. It's going to take more time and effort, but people are worth it.
Right.
And
if more institutions have that as one of their products.
Yeah, and it just comes back to that stack. It doesn't mean we'd stop doing lending in the current form or fashion. It just means that we continue to address the fact that there's people being excluded, and what are the new products and new ways of reviewing that we need to come up with, to include those individuals.
That's a great way to look at it. Well, so for the sake of time, I do want to get to Lenderfit because it's your current baby. So let's do that. But I think if anybody wants to learn more, growth loan, render.capital/growth loan is the current kind of one that we're operating in Louisville, Kentucky. Or you can email us in and we'll get you some information. But let's talk about Lenderfit, because literally Lenderfit is, and in some ways, the full maturation of all of these experiences that you've had in building a microlending program with Access Ventures. So what is Lenderfit?
Yeah. So the simplest way to talk about Lenderfit is to say that it's a client-facing application management system. And the reason why we say that is because there's 3 tools that most capital providers need. Almost any organization needs a CRM, and so you need a way to track clients and customers, and then particularly when it comes to lending, you have to have a portfolio management tool. So the ability to track loan payments and keep up with what's been paid and what hasn't, and the risk of your portfolio, et cetera. And so there's a lot of tools that have been really dialed in. There's a lot of off-the-shelf CRM tools. There's plenty of loan servicing tools out there that are really set up to design, to do those functions. But going back to that whole, you can have a conversation with a small business and understand a lot of things, but if you ask them to just submit information, it causes all sorts of roadblocks and delays. Yeah. They're really, in lending today, and most major lenders are identifying this as well. The application process, all these tools say, okay, do your marketing, get the leads in, get the application, now do the underwriting and move forward. And I always say, like, whoa. How long does it take you each week to quote unquote get the application? Because the application isn't just a questionnaire. It's all sorts of documentation. It's understanding the documentation as it comes in. It's running analysis on the documentation. And so that's where people get tripped up. And that's where you saw all these news articles during PPP and during, the COVID relief programs was, systems were crashing. They weren't designed to handle 500 or 1,000 applicants a day, et cetera. And so we realized, okay, if we had a better method of kind of explaining the journey, and that's key to understanding Lenderfit as well, is, with Lenderfit, you're actually creating a customer journey that's repeatable and your whole team can use it, and it kind of centralizes that process, and it also means that it's improvable. I don't know if that's a good word, but as you go along. And so, a big part of what Lenderfit is it's also a client-facing project management solution. Yeah. When you're working with an applicant and people on your side, multiple people on your team, and you're going back and forth and you're hitting certain milestones and going through different review phases, that's really a project.
Right.
And so up until now, really, lenders have not been treating it like a project. They've been managing it via email and phone calls. I've talked to lenders who are mailing thumb drives around, who are printing off records and mailing records.
Yeah.
Well,
and then it makes it, and I think what you've identified, again, rooted in the problem, but the problem from the perspective of a business owner. And so the problem oftentimes that a business owner faces, maybe they know a lender. Oftentimes they go first to a bank, but maybe they know a community development lender or an impact lender that probably should be their first starting point. But if that person doesn't know the next person, they all have different loan products, and then they start down this path of building an application, and they don't know this world of capital that they potentially could be open to, which kind of gets to some of the future stuff. But even there, when they walk in, especially what we realize with COVID is a lot of that's paper driven, and it's not transparent, and you don't really ever know where you are in that process, and it's one more piece of paper. And then, like you said, the loan officer themselves is spending so much time with text or email or phone calls like, hey, I need this document. Hey, I need this. And so it just prolongs that loan cycle and makes it really, really difficult for the business owner who just critically needs that capital. And I think what's interesting is what you've articulated as Lenderfit, I think, is where you are today and so far as like, okay, we've figured out some product market fit. And so far as like, this is what service and opportunity we provide. But if you could go back to the very kind of first moments of Lenderfit and what was driving the decision to build it? Like why did Lenderfit need to exist? What was that problem that you were solving for that now has kind of become this kind of client-facing project management tool that I think is really interesting? But what was that problem that you were trying to solve for in the early days?
Yeah, so the first inkling of Lenderfit was really around the problem of, as we got small businesses into the growth loan, a lot of times they were so early, not necessarily early stage, but so new to the challenge of accessing capital that they thought even the growth loan wasn't a fair loan product. I think at the time, most of our loans were about 7% interest over 3 years. No credit, no collateral. A lot of times we're having to really coach people through and even help them create their financials to get through this. And really they would say, well, I got a mortgage for this. Why is this, business loan more expensive? And there's a whole lot of reasons why. But we know that was really an amazing opportunity to get that type of capital on those type of terms with that type of information. And so, one of the things that we were trying to do initially, just, the initial thought was, what if a business could actually get their information into a platform of some sort that gives them more perspective on what they could even really access, kind of manages their expectation. And so that's certainly a theme. If there's one takeaway from the first thought of what Lenderfit could be, it's this idea of managing small business owners' expectations. And, that's kind of what loan officers and lenders spend half their week doing. And so, and really I think that the goal of managing expectation was really to create a smoother, more amicable, loan process where, if someone had a little bit more clue, if the power dynamics were shifted, where they felt like they had been informed from maybe a third-party tool or something like that, cluing them into, hey, this is where you're at, this is what stage you're at. It doesn't mean that you're not going to grow and be amazing and, be able to access more capital in the future. But, given your history and where you're at, you're probably only eligible for some microloans or some credit builder loans from CDFIs or your local, chamber or something like that. Because when people come in, especially when it's some of their first times applying for capital, that power they're really frantic and anxious, and they know how to run their business. They don't necessarily know how to speak lender. And so that happened with the growth loan, and then also happened with Mainstream. I remember tagging along there's a story of working with a local business owner that's really key to the history of Lenderfit too, where I tagged along on a meeting to a traditional lender. We walked into a bank together, and I just kind of sat in on that meeting, and it was really that same concern, of like, hey, I'm stepping into your world, lender. I'm used to managing my business, but it's hard for me to know really what you're expecting, what you're looking for. Am I going to say something wrong in this first meeting that's going to somehow disqualify me? So could there be some sort of expectation management tool that is more empowering to the small business and also smooths out the entire process as a result?
Yeah, and I think as someone on the sidelines, somewhat watching it, I think what was really impressive to me was your ability to build in elements to Lenderfit that I think sometimes people just assume, but I think were really unique insofar as talk to us a little bit about as you were building it, what were some of the unique features just of Lenderfit that have been super meaningful to some of your customers?
Yeah. So, what I mentioned earlier, CRMs and portfolio tools, and rightfully so, the folks that built those tools were going to the lenders and their customer, who was their customer, to see what features they needed. And I would really call those tools more back-end tools, and so it makes sense to kind of go to the lenders and figure that out. With Lenderfit being client-facing, we really need to consider two customers: the small business, the customer of our customer, as well as the lender.
Yeah.
And what it's meant to small businesses are some of the feedback and the quotes that we receive. I mean, again, going back to PPP, I remember talking to businesses that worked with lenders who were using Lenderfit, and before that, they were applying with some big national bank. And night and day, they would actually use the phrase, "I enjoyed the process." Anytime I start a conversation off with a small business, there's a lot of great things that they could say, but anybody that says, I really liked it, I really enjoyed the process, I feel like that is the win. What loan application, what financial application have you ever gone through where at the end you're like, hey, you know what, that was actually a pretty good process.
Yeah. Well, and I think what you're hitting on are there's a couple of features, and I'm going to call them out. One, you built it, I think, again, with the small business person in mind, meaning it's mobile friendly. And so I want to talk to you about that, like just the document itself and how that has revolutionized the small business owner's ability to submit and to provide many of the documents these lenders are requesting. And then number two, I think transparency is key. So I think the fact that a borrower knows generally where they are in the process, that the program or the product, the loan product or the grant product, because that's a whole other story, but you're actually processing some grant applications through your platform as well. They know where they are, and they know what the next steps are. And then I think those two elements, and then I think the third that I think is pretty interesting as well is the reminder or the notification feature that automates some of the process that has unbelievably reduced the amount of time the lender spends in going back to the borrower for more information.
Yeah. We talk a lot about personalized automation, and when people adopt new technology, they're nervous that it's going to damage rapport. And I think most conversations, anybody we talk to is saying, I do want to still have a relationship with my customer. I want to know them. I want to make sure that they feel known and cared for. And so interestingly, without Lenderfit, a lot of people are kind of failing miserably at that. If you've got 100 applications that you're monitoring, you just couldn't hope to catch up with everybody that week. Or to be as familiar with their application and where they're at in the process at the drop of a hat. And so in Lenderfit, some of the solutions that we do around that is, we do weekly status updates. Again, this is a project. And so how do we get an automation out there that's personalized to each of those 100 applications of exactly how far through the application are, what's been approved, what comes next, and give them just a super easy pathway to jump back in and be working on the application. Another way that we kind of incorporate personalized automation is as the applicant is, or as the lender is going through and processing the application, they can focus on processing the application. But as they're performing certain activities in the platform, you can turn on notices and notifications that go out to the applicant. So again, if you're working, let's say that day you spent your time in 20 different applications and you approved 100 different items. There's no way you could take the time to text that applicant the 5 things that you worked on that day on their application. But with Lenderfit, we're doing that.
Wow.
And so, the notion of caring for, knowing your client, making sure that they feel like, you're in this with them. And then also too, just as a discouragement, again, putting yourself in the shoes of the small business, you really need the money. Mm-hmm. And so if it's been 4 days and you haven't heard from the lender, that's really frustrating.
Yep.
So while the lender's doing work, why don't we just kind of send some notifications out that they're making progress? And by the way, we can use those notifications to pull them back in and finish whatever they, haven't finished in the project. And so that's normally the feedback that we hear from small businesses, that they loved being able to use their phone, that they loved the reminders, that they knew exactly where they're at.
Yeah, and the phone is just kind of the final thing. Like, I think we forget oftentimes, some business owners, especially the business owners that many of the lenders you work with, they don't have a computer, maybe, or the computer is not with them all the time. And the ability to use their phone to take pictures and upload documents is super helpful when you're busy making payroll and trying to figure out how to cover the rent and to keep the doors open.
Yep. Yeah, definitely. Some interesting stats from our platform. When we're talking with lenders, we ask, do your applicants want to use their phone? A lot of times they say, yeah, they do want to use their phone. And I'm not comfortable texting with my own personal phone. And so, on platform, what we see is about 40% of the activity inside of an applicant, a business loan application, is done via a mobile device.
Wow.
And I think that number is a little surprising to most people, of just when it's an option, how many people would prefer to, be able to engage that way. And then coming back to the phone, communication, it's easy to underestimate the fact that communication for communication's sake without context is okay. Imagine sending an email without a subject line.
Right.
You need the context of the subject line. You need additional information. And so 2 things that are occurring with small businesses as we spoke to them, a lot of people would wait until 10 o'clock at night. They're running the business during the day. They got family to take care of. And so from 10 to 11 or whatever that time frame was, they worked on their loan application. Well, with Lenderfit, if the lender has a question and they're getting a text alert with the opportunity to click right in and respond to that, when they click in, they see exactly, what is this item? Who sent me the question? What was the last conversations that we had about this? And they can respond on the go. So, getting a quick answer or getting a small business owner's attention in the middle of the day instead of having to wait till the end of the day moves applications along. You can save days or weeks of time, just with people responding faster and being willing to give it more attention. And if you think about it from the business owner's perspective too, it's understandable. Like, you don't, for those quick things, you don't mind answering, but if it's a longer process or question or answer or whatever, you want to wait until the evening. And so there just hasn't been a mechanism to get those quick questions over, at least that I haven't seen in other platforms.
Yeah. Well, we're still in the midst of COVID, and it's been with us for a long time now. And we know the global pandemic has been rough on quite a few businesses. So a lot of your customers, so to speak, or the customers of your customers. But for Lenderfit, you launched right before COVID hit. What has COVID been for you as a business? And what does that look like? And how have you been positioned to really support many of these communities that we care about?
Yeah. Well, so one thing that was really cool was the same system that we designed to help individuals in an office space become more efficient as a team once that information was in, was actually perfect for remote work. So we didn't have to make any changes. And if anything, I think a lot of users were thankful for a solution that actually allowed them to work remotely and still manage all of these applications. So that was a biggie. One of the things that was really encouraging was we have more of a national perspective on the activity that communities are taking to support small businesses. And so it was really encouraging just to see the number of communities that didn't wait for, governmental capital sources and actually took action. They called up the foundations around the city. groups that were, already supporting small businesses, and they created their own emergency loans and grants in addition to, some of the other capital that was coming in, because there was quite a delay. You weren't necessarily getting those funds right away. And so that was really encouraging just to see how our country reacted to that. And to see, and really you started to see different communities that were really leading on the national front, because they actually said, hey, like, we're going to take charge of this and try to solve the problem. Yeah. And that happened here in Louisville as well. And Navy was kind of leading the charge, and there was some significant contributions from the city and other groups that put together an emergency program here, even locally.
Yeah. I think with Lenderfit, I remember an early phone call that you and I did with some other communities. I mean, you had just launched, COVID's hitting, people are trying to stand up all these programs. And I think one of the things that stuck out in my mind more than anything was, obviously, as you said, our nation kind of responding and like, what can we do to support these lives, these communities, these businesses? But then as organizations, and I remember one community in particular, and I won't mention the community, but we were talking with the executive director or the CEO of one of these community lenders, and they were mobilizing their team, exhausted, working just 24 hours a day, it seemed, but also just terrified because, one, they've got to move money fast, and they've never moved it that fast before. And they've got to do it when they're distributed as a workforce. And their entire process as an organization, and this was not just one organization, was so paper-driven that this person was nervous, kept up at night because of the lack of security and emailing all of this sensitive documents. And so there wasn't for them a secure, transparent, accessible portal or platform through which to process these loans confidently, that they could protect the information of these borrowers. And so I just remember that conversation in particular, and Lenderfit kind of was built with that ethos in mind. How do we create a platform that's transparent but also secure and doesn't require, everyone to be in the same location, but information is flowing?
Yeah. A big focus on Lenderfit was, how do we build a solution? Sometimes there are solutions that are necessarily tools that you use after the fact, like a portfolio management tool, or maybe you need to update a CRM record of a phone call that you made. But we wanted Lenderfit to be something that was more exciting to use because it was actually advancing your work for you. It was doing more of your work for you with some of those reminders and whatnot, while solving some of those core problems, because so like secure document transmission is kind of just table stakes. And you could achieve that if you used, something like Dropbox or Box or some of these, giant companies that fit any industry. But inside of Lenderfit, what we realized was, okay, well, how do we combine that base level need of secure document transmission with, proactivity, and how do we help the lender to be more proactive? And so, really, again, going back to that project management approach. So as that information comes in securely and you need to understand it, how do you speak to exactly that one piece of information rather than, having to create an email with 5 different questions about 5 different things inside of it? And so just really having the dialogue around each of those securely uploaded documents.
Yeah. Well, the exciting thing, again, like I said, I'm literally on the sidelines just watching this unfold, and it's cool. I mean, you're now in 25 plus different states, working with, millions of dollars on your platform and quite a few different lending organizations. What's next? So as you think about Lenderfit, what's next for you? What are you guys pressing on towards, and what do you envision is, in an idealized future? What does it look like?
Yeah, certainly. Well, there's kind of the nuts and bolts. There's certainly features, kind of on a base level, there's certainly features that we want to lean into and enhance and to move forward. I think we've come up with some innovative ways to tackle some of the classic questions that lenders have around, can you afford this loan payment-wise? And, do you have the collateral that they might be asking for? And so, continuing to lean into those. But then too, as we think about, again, that dual mindset of not just our customer, but the customer of our customers, how can we create a way for small businesses to even get ahead of the application process? Is there a way that we can allow them to be preparing and collecting and organizing their information such that, when they do officially apply with another lender who's using Lenderfit, all that data is just there already. And or, just making it easier for lenders to, like, how can we, when it comes to speed, lenders are always looking for faster ways to process information, and getting the information is one of the key aspects of speed. And so the more we can prep small businesses to move quickly or to bring all the information that they need into an application process, the faster, then we're solving that speed challenge of how do you get the information to review faster. Yeah. Some people do that through, beaming data into the platform, et cetera. But there's a lot of other things that you can prepare a small business for ahead of time that aren't just data related. Again, going back to that very, very first conversation around expectation management, based on some of the data that they already put in, what should they be expecting? What can they expect to see, and how can they and how can we, again, kind of prep them for this interaction so that it's more more casual almost between the lender and the small business, and they can discuss freely and come to a decision faster instead of having so much anxiety and kind of tribulation on the small business side.
Well, David, we could keep talking. I think one final question, just as an entrepreneur, where entrepreneurship is problem solving. It's fundamentally what it is. How for future entrepreneurs or people listening to this that are entrepreneurs or budding entrepreneurs or whatever, how do you, as your business scales, how are you and your team remaining rooted in the problem? Because obviously you started, everything that we've talked about today is related to kind of understanding very personally the human experience of that small business owner. How are you finding yourself staying kind of rooted in that as you're kind of iterating the product and kind of scaling that to the masses?
Yeah, so I'll create a parallel here between the problem in the financial industry that we're helping to solve and how this applies to a team. And so, going back to this idea of someone in front of a committee, it's not necessarily that efficient to have the person in front of the committee. But one of the goals was, how do we get the person off the paper? How do we not reduce someone to, the words on a piece of paper? That committee was really influenced by seeing these individuals. There were times where they would have changed their vote after seeing the small business and hearing them and getting a chance to dialogue versus just reading about it on the paper. And so I think there's a lot of decisions that entrepreneurs and businesses are making where they say, we're devoting this amount of this person's time and this person's doing this role, and we can't have them in this meeting, or we can't meet too often on this, or whatever it might be. And it all makes sense on paper, and it might look good as far as, hey, we're dedicating this person to this role and they're not going to be at this meeting or whatnot. But I think that early on in entrepreneurship, like really, really, while your team is small enough, involve them in these conversations. In Lenderfit, we talk about product as an entire team. We have every week we're chatting about the product. And the reason why I love that is no one's going to know your customers more or the challenges you're facing more than your employees, even if they're super junior or even if they're in some role that isn't even product related. You have all sorts of wisdom from outside advisors on kind of macro strategy type things, but it's normally your team that knows the most about what's going on, and the most interesting ideas could come from, a support individual who doesn't know how to code, or a sales team member, and so I think that my advice, or having experienced, this early stage at least thus far, is to err on the side of like having a few more of those meetings than you think that you would. Early on, you're able to do these things that take a little more time so you can learn how to scale and grow. And if you make the jump to scaling and growing too fast, you may not have found the right path. If you start to scale and grow down the wrong path, it gets pretty costly and painful to get off that path. And so, really be exhaustive and, spend some of the time that on paper maybe doesn't seem like it makes sense. But in reality, you're actually taking the time up front to kind of find that right path before you hit go.
Yeah. So that's great. David, thanks for your time.
Appreciate it.
Next beer's on me.
Awesome.
And for those of you listening, to learn more, check out lenderfit.io, and you can follow David and Lenderfit on Twitter as well to stay up to date. Thanks, David.
Thank you.
That's it for this month's episode. If you like what you've heard, please subscribe and write us a review. This is the best way for other listeners like you to find our podcast. More Than Profit is a podcast from Access Ventures, a private operating foundation with a mission to build a more inclusive and creative economy. Learn more about the work of Access Ventures at accessventures.org. Production, editing, graphic design, and social media is by Render, a new public benefit corporation that envisions a world where opportunity outweighs obstacles. Learn more at workwithrender.com. I'm your host, Bryce Butler. Thanks for listening.